One of the most common questions that I get asked is, what are the most important pieces needed in order for me to build business credit and get access to working capital? So in this video, I will be ranking most important things needed to least important things needed in order for you to build business credit. Now, the way that I'm going to grade this is based off of all the data across all the companies and businesses that we've helped get access to business credit. So the reason I'm going to grade each of these the way that I am is because I went back to all of the client profiles, all the client businesses, and all of the different companies that we've worked with and helped get access to funding. And I started seeing the common thread of what was most important to least important. We're compiling it into this video and we're giving it to you right now. So the first component to getting access to business credit is the owner's personal credit profile. The owner's personal credit profile is a snapshot in real time of how they've been managing their personal debt. When you're first starting out in business, one of the most important things that you can have a strong understanding on is your personal credit. This is going to help build out your personal hygiene, which usually translates into how you spend your business capital. And since banks know this, this is why 99.9% of the time a business is going to have to personally guarantee their way into their first business credit line. Now, PG means that you are co-signing on behalf of the business. So think of it as a parent who is co-signing on behalf of their child for them to buy a house or a car. Now, I think that a lot of people struggle with having to use their personal credit to get that initial business credit boost because they think, why should I have to use my business credit if it's technically different from my personal credit? But again, the business isn't strong enough just yet if it's generating under $2 million in revenue, and especially if the corp or the LLC is under 2 years old. And so if your business isn't at $2 million just yet in revenue consistently over a 24-month period, and if your business is under 2 years old, then you're going to have to personally guarantee. And there's nothing wrong with that, because think of it like this. If it's between you going out of business or staying in business, and all it takes is you signing on the dotted line, personally guaranteeing on behalf of the business, you're betting on yourself that you're going to make it happen regardless. I can't tell you how many times I've seen a scenario where two businesses are identical, bank accounts are set up, the names are almost identical, the type of business that they're doing is almost identical, the revenue is almost identical, but one business owner has a 580 credit score and the other one has a 750 credit score. Banks usually are going to go with the one that's a 750. Unfortunately, the one that's under that 620, 630 mark, they're going to get denied altogether. And because I see personal credit playing such a big role, especially early on with startups or businesses not yet at that revenue, I'm going to rank this at the S tier. The next one that we have is business formation documents. Now, I'm going to group this into one piece, and that's going to be your EIN, your LLC, or if you're a corp, your corp, and your articles of organization or your articles of incorporation and your operating agreement. Let's break these down. Your business formation documents is what you get when you set up a business entity. Having an LLC or a corp set up is what actually separates you from the business. This creates what's called a corporate veil. Now, if you have a sole prop, there's still no corporate veil created, even if you have an EIN. Because when you set up the LLC, that's when the IRS sees you and the business as two different entities. In fact, the IRS is going to see that corp, that LLC, as its own person, which is why it gets its own EIN. Now, the business formation docs is what banks are going to ask for when you're opening up business bank accounts. And your EIN, also known as your employer identification number, is like the social security number for your business. And so that's what you're going to use to apply for credit on behalf of the business. And when it comes to your operating agreement, this pretty much says how the business is structured, meaning what ownership of the business you have. So maybe you have 100% ownership if you're a single member LLC, or maybe you have some members or partners involved in the business. This can be 50-50. This can be 25-75. Now, getting an LLC established isn't difficult. You can either use a third-party servicer or hire an attorney in that state that you're looking to set up that LLC in to establish and set up this LLC for you. So once it's set up that one time, you're good to go. Now, an LLC or an S Corp by itself is not enough for it to get business credit without everything else that we're going to be breaking down in this video. And so because of that, we are going to be ranking business formation at a B. The next one on the list is a business bank account. A business bank account is the account used for business transactions and deposits instead of your personal finances. Now, your business bank account is specifically designed to separate your personal finances from your business finances and business cash flow. And remember what we mentioned earlier about the corporate veil, which is you having that legal separation between you and the business. Having a personal account and having a business account properly separated is going to allow you to keep that corporate veil in place and keep your accounts from getting shut down altogether if the bank ever sees that you're commingling funds, which is what you want to avoid altogether. Now, in addition to that, having a business bank account established allows you to build up a partnership with that bank. What this means is they're going to see your business as someone who wants to do business with them. And so when you decide to go back in and apply for a business credit line, they're going to say, yep, we're familiar with your business and we see how you've been faithful with us. We see how much money's been coming in. We see how you've been consistent. So here are your options. And since bigger banks like to see liquidity, meaning cash flow, this actually helps offset the age of the LLC. So if maybe your LLC isn't past 2 years old, but it's bringing in good revenue and maybe you don't have A1 credit like 780, 790, maybe you're closer to 690, 700, this can help offset some of those deficiencies and still help you get over that hump so that you can get access to more credit lines and more credit options for your business. And because of that, I am going to rate a business bank account at an S tier because I see it working for more people and more businesses than not having one at all. Next on the list, we have your business's credit score. A business credit score is made up of your company's payment history, available credit, account types, and judgments like tax liens, UCC filings, or bankruptcies. Now, there's 3 major business credit bureaus on the business side. That's going to be Dun & Bradstreet, Experian, and Equifax. And yes, those are the same Experian and Equifax that you see on the personal side, but they also have a commercial division. A popular score that a lot of people like to talk about is your Paydex score that ranges from 1 to 100. But the downside of that is that banks aren't really looking at a Paydex score when they're determining whether or not they want to approve a business for a business line of credit, because the Paydex score is primarily composed of vendor accounts. Now, vendor accounts, vendor terms, or net payments or net terms, it's all pretty much the same thing. And what that means is you have 30 days from the day that you're invoiced in order for your business to make that payment. So if you're invoiced on the 1st, you have 30 days from the 1st to make that payment on or before the 30 days are up. And here's the thing, those net terms only apply to that creditor. So if you go to, let's say, a store and you buy 1,000 batteries, they give you $1,000 worth of business credit specifically with them. You can only use that vendor account there at that store. You can't use it everywhere else. Now, on the other hand, Experian and Equifax have their own scoring models as well, but the difference is that they include things like financial and non-financial accounts. Financial accounts are things like credit cards, business lines of credit, business loans, all reporting to your business credit. Non-financial accounts are the vendor trade lines and net terms that we just finished breaking down. So if you're going to focus on building out your business credit score, banks are going to mainly look at your personal credit score, especially if you're under $2 million in revenue. And they're also going to take a look at your Experian business and or your Equifax business credit score specifically for those financial accounts that are actually reporting. So with that in mind and knowing what we know and how little impact a business credit score actually has, we are going to rate this at a tier B. Next up, we have industry classification codes. This is what the banks and the government uses to classify your business into its proper category and its line of work. Now, these classification codes are used everywhere, even if you haven't noticed them yet. They're used when you open a business bank account. They're used when you apply for a credit card. They're used when you file your taxes. And they're even used when you set up your business with the state. Now, there's 3 rankings that you want to pay attention to when it comes to industry classification codes. You have low risk, which is green. You have medium to high risk, which is yellow. And then you have red, which is known as restricted. Now, you want to stay in yellow or green, which still allows you to get business credit, even if maybe your business is inching its way into maybe medium to high risk. Really, all you need to do is when you connect with an underwriter, let them know what your line of work is, how your business is actually structured, and they're able to tell that story into the system. Now, I wouldn't worry too bad if my business is in maybe the medium to high risk category, but I would try my best to get a classification code that's classified as a low risk, because this is going to be less questions asked by underwriters and banks, and it's also going to increase your approval odds for your business, which makes everything a heck of a lot easier. Now, having the right industry classification code is so important. We were working with the business owner who was facing constant denials The minute that he made the switch into the right industry specific for his business, he was able to go from $0 in business credit to $175,000 in working capital and counting. So that one switch literally made all of the difference. Now, the reason this is so important is because this is one of the main metrics banks use to mitigate risk when they're looking at your entity. So this is something that you don't just want to put on the back burners. You want to pay close attention to how your business is categorized, because depending on how that business is bucketed is the options of funding that your business is going to have. And it's also the threshold of risk that the bank is willing to take specific with your line of work. So again, if they don't have a lending appetite for your industry, they're going to deny you altogether, regardless of how good your credit is or how much revenue you're bringing in. And because this is so important, I am going to grade industry classification codes at an S. Next up, we have a business phone line. Now, this is a phone line associated with your business. Banks are all about seeing your business set up properly. And one of the easiest ways that they can identify that is by a business owner having a personal line and having a business line properly separated. So the phone line that's associated specifically to your business is what's used inside of the database. And so when banks and when lenders are going into the directories, they're able to see, okay, this one phone line is solely attached to this business, meaning it's not just a person and it's not just a business. Like, it's literally just for this. Now, even though having a phone line for your business is important because it obviously helps you look more professional and it also helps separate a personal call from a business call, I've still seen a ton of business owners get approved for business credit lines, even when using their own personal cell when opening up a business bank account and when applying for business credit. And because of that, I am going to grade this at a C, because it's just not going to move the needle for you like everything else we've been talking about. Next, we have the business name. A business name is the legal name used when setting up your LLC or your corporation. Now, picking the right business name is important, not just because it separates us from our competitors or it's fantastic for branding, but this is also something that banks are looking closely into. The business name, like an industry classification code, go hand in hand. And so I've seen banks turn down like well-ran businesses with legit revenue, strong profiles, just because the business was maybe in an area that they didn't want to lend to. So sometimes I've seen an instance where they don't want to touch real estate businesses. And so if you have house flipping or if you have land development inside of a business name, regardless of how the credit profile is structured for the business owner and how much revenue they have coming in, banks are like, no, we're not going to take that risk. So this is why I typically recommend my clients, when you're picking a name for your entity, you want to try to pick a name that's generic and nothing that raises red flags. I like to play with names like your own personal name, LLC, or the initials of your first name, last name, or the initials of all the partners, business management or business, LLC, or enterprise. And I like to keep it as generic as possible. So that way it's not screaming a red flag to the bankers and to the eyes of the lender. So this is what you want to keep in mind as you're picking a name for your LLC, or if you're renaming your business altogether. Keep that in mind because it could mean the difference between an approval or an instant denial. And because I know that, I am going to rate this at an A. The next one we're breaking down is the business address. This is where the business is established geographically. Now, where a business owner decides to open up their business is completely up to them. This can be Wyoming, Delaware, Texas, Nevada. Some people pick different states, specific states, to avoid maybe paying more in taxes. Now, regardless of where you decide to open up your business, there's 3 types of business addresses that you can use. You have a brick and mortar location, so like a storefront. You have a virtual office address, and then you have a home-based business address. Now, the brick and mortar address is exactly what it sounds like. That's a physical location that you work out of. The second type of address, which is the virtual office address, it's kind of like the brick and mortar location, but the difference is that you're just renting out the spot, like the actual mailbox that you can receive mail to. Now, don't confuse this with the P.O. box, because if you get yourself a P.O. box, that'll get you flagged altogether. So when you're picking a virtual office address location, you want to make sure that you're doing a reverse search. You're literally Googling the address so that you can see that it looks like a physical building. If it looks like a UPS store, or if it looks like it's like a storage facility, you want to avoid using that. And then lastly, and we're seeing banks start to use these type of addresses a lot more, is a home-based business address. Now, the game changed about 3-4 years ago when Zoom culture started happening and people started working remotely way more than what we had ever done in the previous years. And because of that, banks understand that real businesses are making real money from the comfort of their home. But because of that, you can't just use a home-based business address. If, let's say, you are in automotive sales, you would have to use a physical address because it's an actual car lot that you're selling cars from. But let's say that maybe you create content from the comfort of your home and you've converted one of the rooms into a studio. At that point, you're either able to use a virtual office address, or you're able to use a home-based business address. Now, quick pro tip and caution here is, even though you can use a home-based business address to get approved for business credit lines and still use that on business applications, you want to be careful that all of your personal information isn't online. And so if you're maybe someone who, again, you're a reserved person, you don't want all of your personal stuff out there, then maybe taking a look at a virtual office address is going to be a better option for you, even if you work from the comfort of your own home. So with that in mind and understanding how important having the right address is for your business, I am going to rate this at a B. Next up, we have the business email. Now, this is an email that includes your company's domain name. A lot of people, especially when starting out, are going to use free emails like Gmail, AOL, Hotmail.com, right? And there's nothing wrong with that, especially when you're starting out. But when you start using a business email, this is when you use your company's domain. So it can be, let's say, support@yourcompanyname.com. So I'll give you an example. Support@insideinnercircle.com, friends@insideinnercircle.com, money@insideinnercircle.com. We're using our domain name for our business to create an actual professional appeal to the business and how it looks. Now, this is important, not just because it helps you, again, separate your personal email and your personal communication channel, but it also, to the eyes, again, of the bank, lets them know, okay, this is an established business, because in order for them to actually have a business email, they must have a business website, which is one of the metrics that they're going to use when they're looking at the legitimacy of your business. Now, when it comes to the business email and the business website, when it comes to it being a make or break on whether or not a bank is going to work with them, I haven't seen it enough to really move the scale to say you absolutely must have it. Do I still recommend it just because it's good for you and you're going to be able to use this as you start to generate more revenue and it just looks professional altogether? 100%. Have it set up. Once it's set up, like, you're good to go. You can continue on with your day-to-day operations, but it's not going to be a make or break if a bank decides to deny you. They're going to deny you for other reasons outside of this one reason alone. And because of that, I am ranking the business email with the business websites on this tier at a C. Now, last on the list, I have a business's social media profile. This is the account used to bring awareness to your products and to your services online. Now, there's something known as online presence and social proof. And we all know that, especially in the age of digital media and social media, right? Right now, you're probably scrolling on TikTok or you're probably scrolling on Instagram, and you'll maybe have a couple different brands that you follow. You'll see some testimonials. You'll see maybe they'll put out the product online. You'll see a couple of reviews. And that's important because it's going to boost the amount of revenue that you generate. And it's also going to let your ideal customer know that you're in business and constant new products that you're maybe launching or maybe that you're running sales on, which again means more money for you and your business. Now, revenue is obviously something that every business owner should strive for every day. You're creating constant awareness of your product and of your service. But again, in the eyes of the bank and in the eyes of the underwriter, having a social media account for the business isn't going to be enough to really move the needle, especially when it comes to applying for a business credit line. In fact, if you were to look at a business bank account application when you're opening up a business bank account or when you're applying for a BLOC, nowhere on there do you see, hey, what's your social media channel or what's your social media account? Again, this is more for you, the business owner, to continue to scale your revenue. But in regards to you getting access to business credit, it's not going to do much for you. And so because of that, I am going to rank business social media accounts at a D. Now, what do we do with all of this information? Do you just set up the LLC, just focus on your personal credit and just get the business bank account? No, you still are running a legitimate business. And so you want to have all of these pieces that we just broke down working together as one piece, because this is going to help your business create more consistent cash flow. You're going to be more organized. And when you go into the bank, if you have all of these pieces together, it's only going to help your cause when you're applying for business funding. So I wouldn't disregard any of these. I would just have them work together as a whole. So if you found value in this video, consider hitting that like button down below, because it does help this channel reach a larger audience of people who need to see this type of information. Again, feel free to share it with a friend or a loved one, because again, sharing is caring, and that's exactly how we've been spreading awareness of our channel. But other than that, I appreciate you guys checking me out. Until next time, everyone, I will see you in the next video. Till next time.